All right, folks, here we are on Trading Up. We've got Mike Azevedo here back in the house. We've just done an amazing podcast. Link underneath the video. And this is a top draw podcast, guys. You've got to go and check it out. But now he's about to open up his chart and show you what he does and walk you through. It must be your best trade ever. 1 to 165 risk to reward.
1 to 655.
Oh, yes. 655. I wrote it down wrong. Okay, that is ridiculous. So let's have a look at this. Righty-ho, folks. I'd like to introduce you to something new here on the Trading Nut channel. It's the Trading Nut Funded Cup, sponsored by City Traders Imperium Funded Trader Program. You can win almost $200,000 worth of prizes. That's for the top 10 winners. And the top prize takes away a $100,000 funded account with City Traders Imperium. Folks, if you want to register for this and show your skills as a trader, click on the link above or the link below the video or in the podcast description. Then sign up for free before the 15th of April 2022 and get 10% off any City Traders Imperium funded challenge just for entering the competition. Good luck, folks, and we'll see you in the cup.
Yes. So let's here, I'll kind of break it down, let you guys see how I look at this market and what I do to really get into these trades. So, Chef JPY has probably been one of the better pairs that I've ever traded. It was before this trade here was my largest trade. I think it was like a 1 to 255. But when we're looking at the market here, this was price action back in June, and just kind of breaking it down. I don't have my markings on here yet, but just breaking it down. This right here started out to be a distribution, right? And what we were looking for was to seeing if price was going to continue to take this market lower. Well, when we ended up, jumping our creek here and breaking this high, this actually turns into a massive reaccumulation on a higher time frame. So immediately out of this, I have 2 points of interest, right? This is my leg, right? This is my bullish leg right here. And my 2 points of interest are this body of price action, which is another lower time frame reaccumulation. This is the cause, right? The cause of the break. And this is what's maintaining the structure point. So when I go to break down the chart, these are the two areas that I potentially am going to set limit orders on. Okay. And when we look at it, and this was kind of what like the chart looks like right here. So, you can see my reaccumulation. We have our price action in here. And if I go back in to see, okay, well, what actually happened in here, coming down to a 1 hour time frame, we could see that, okay, yeah, this is our distribution, our complete market cycle. We have a distribution, we have a redistribution, and then we have an accumulation, right? We have our 3 drives, okay? And then this ultimately is what causes the market to go higher. So this is my point of interest right here for my refined entry. This right here is where I'm setting my limit. It's just now, what can I do to reduce my stop loss to give me a higher risk to reward, all right? And what I look for is the most voluminous candle. Right. So just coincidentally on this, the 2 hour candle was the most voluminous candle, right? This is what I've got marked out in yellow. And out of this is what I put a fib on. All right. And I mark just the body of the candle, right? I mark out my 50 and my 80, and I start looking for confluence, right? And in this case, 80% of the 2 hour candle, I don't know if I could go to the 30. Let me just see if I can see. Oh, yeah. 80% of the 2 hour candle is also the 30-minute open, right? And I know we can't go lower time frame here, but this price action was from April, you can see right down here, April 23rd, 2021. All right. And in this price action, there's actually a lower time frame accumulation, right? And I'm going to pull up my screenshot from that chart. Bear with me 1 second. I think it's this one right here, DWB. So this is why I take a ton of screenshots, because you never know when you're going to need this data. So inside of this price action right here, below the 117,600, right? I'm going to just open up another chart, and I'm going to, this is right out of my journal as soon as it loads. So this is from my journal. And remember, that price action was April 23rd. And you could see I screenshotted this April 25th, 2021. This is on a 15-second. And this was actually a position that I caught. I caught this entry right here. Okay. I took it out of the 50%. And, I took some profits out of it. But when I looked at this, we have a complete accumulation. And this is what is maintaining that structure point within the reaccumulation that causes the higher time frame leg. So when I see, okay, this is our manipulation. We could see that price has mitigated out of this after making our high. So now my next point of interest is this price action right here, right? This is what I want mitigation out of. When I measure this out, okay, the 50% lined up right here at 117,550. The 80% lined up at 117,540, right? So if we look at this, okay, where I want to take my next entry and my stop loss is going to be this low of the wick, right? I don't need to risk anything below that, because if we break below that, this entire thing is done. Buyers are out of the market and we're going to come to a lower position. So I'll take the loss, right? So 532 is the entry that I took on this line. So what I did was I made my entry, my stop loss 117,530. And my entry up here was at 117,550. So it was a 2 pip stop loss is what I took on this. If we come back over to the chart, right? And I'm just going to exit out of replay mode and I'll show you where we got back in.
Folks, when you're done watching this, go check out my sponsors, BitGet. They're undoubtedly the best crypto exchange for traders, and you can get a $3,000 tether bonus when you join.
All right, here we go. So price comes in, and I'm just going to come right down to it. So I split my risk, right? I took an entry off of that 2-hour candle, and then I took one off of the 15-second time frame. Remember, that was April 23rd, okay? And this was September 20th when it comes in, 150 days later. If you look at it, right, my entry, and you could see right here, my entry was at 550, right? The stop loss was 530, and you could see 530, the red line right here. That was my stop loss. Price comes here. If I put this on, right, you could see price comes to exactly 542, all right? And, gave me the entry there, no issues. I'm in both of these entries. And if we come up, of course, trade management, I didn't hold 100% volume to all of this, right? But when we look at what this did, I was targeting a new high, right? I was targeting this high right here. So at this high, when we look at it, that low entry at this high, this is where I took my partials. It was 523 pips, okay? And it was relatively quick. Just to kind of give you an idea, that was a 1 to 373 R to R, all right? And if we go back and look to see where price's highest point, where I took some more, let's exit out of here. There we go. Where I took some more profits out of this were, give me a second. Let me exit out of replay mode. There we go. So you can see price has now reaccumulated, and now we're at an all-time high here, right? At current market value. And this is 1,023 pips in profit. I'm still holding those buys. And of course, I'm looking for price now to come back and either mitigate out of here or come back into our larger leg. But where it's sitting at right now, it's actually over a 1 to 655 now. Let me see where she's at. And it's extremely easy to hold a trade when you're over 1,000 pips in profit, and just understanding where we're going. So this is currently at a 1 to, what are we currently at? Let's see, we are 27.84. So 127.84. So it's currently at a 1 to 735 is where that's at. And again, it was all based off of, looking at it, right? When we come back over here, I had to wait. This is the 15-second chart was in here. I had to wait that 150 days for the market to come all the way back and activate my entry. And where am I holding this to? Well, if I come up here on the weekly, where am I holding it to? This is the area where I'm going to start looking for hedge sells, right? This right here, this distribution at the 80% of this leg that causes this break, that's where I'm going to start looking. So, if you go back to some of the recordings in like March, April, May, June, I was saying I'm taking this to 134, and I'm planning on taking it to 134. Obviously, I'm going to be hedging positions. I'm going to be getting into some more buys, but I'm still holding just under 50% full volume on this trade. And it's by far the best trade I've taken. I've hit several 1 to 100s, but now at a 1 to 735, and until the market shows me some weakness, and when you look at this right here, there is no weakness. We're just continuation move after continuation move, just playing the reaccumulations. That's how I'm getting into this market.
And a quick question from me. So what about because I've had this happen many times, you set a limit order, it doesn't get filled. because price doesn't quite get there. Do you have that issue, and how have you ever overcome it?
Yep. So let's just say that in this case here, right? And I'll kind of just draw it out. So let's say this is your entry right here. All right. So price comes in and does something like this, right? And then gives me that and misses, and it happens all the time. I have a folder on my desktop labeled missed trades. And, I'll over the weekend, me and my buddies will look at all the missed trades we've had. Something like this comes half a pip, 0.1 pip from our entry. So if I miss this trade right here, once we get this break, I'm taking an entry out of this. So that'll be my stacked position. And then when we see a price action where we do this and we reaccumulate, right? Now I'm taking my next entry out of this, and I will continue to play the reaccumulation, or I like to call it the continuation move, right? I'll continue to play the continuation move until we break that order flow. And when we break that order flow, then I'm going to refer back to structure. And I'll, in a case like this on, Chef JPY, right? A lot of the JPY crosses, they just haven't broken structure. I mean, we haven't seen we have to go up on the daily chart to see, well, when was the last time this thing broke structure? I would say 2019 was the last time this thing has broken structure. And you can just see the market cycle playing out, continuation. And that goes with trade management. That goes with the understanding of what your market cycle is. When you start to understand where the market cycles are and how they are playing out, again, it's extremely easy to hold a trade you're 1,000 pips in profit on.
Hey guys, ever wonder what broker I use? Well, I use these guys, Hanko Trade. Look, it was a no-brainer for me because I was looking for a broker with really good trading conditions and one without any leverage restrictions. Look, also, by joining Hanko Trade, I was able to cut my cost of trading significantly with their super low commission of $1 per 100K. Look, if you want to find out more, check out hankotrade.com, or there is a link in the description. Awesome stuff. Well, look, guys, we did record a podcast where Mike goes into a lot more detail than what we've just heard here, but you have got to see it play out. And sorry if there was a little bit of lag on what he was drawing on the chart and what he was saying. So you're just going to have to work that out. You might have to go back and watch this again. Mike, what's the best way for the guys to get hold of you?
Again, you can hit me on Instagram. It's Fibs and Profits, or you can hit me in Discord. It's the same name, Fibs and Profits.
Awesome stuff. Well, look, guys, thank you again for watching. Do remember, hit subscribe, hit like, and click on that notifications bell, and we'll see you in another video in the future.